Joining me now is Terry Lynch. He's the CEO of Polymetallic Mines. Great to see you again, Terry.
Great to see you, Mark. Awesome to be here in Toronto on such a beautiful day.
It is a lovely day. You've got lots of news for us, and a full disclosure off the top. Before we start, I've said it before, I'm a shareholder of Polymetallic, and we know you are too in a much bigger way. But well, let's set aside that for now. But lots of news flow with the company. There was a name change from Power Nickel to Polymetallic Mines. You raised about $50 million. You've got a new discovery, and the most recent news is a big deal with Lift Power in Quebec, which essentially triples your land package. So how did that come about, and what does it do for the company?
Yeah, we noticed as we were working on the obviously the Nisk package that you try to understand your regional positioning, and so we sort of saw some signature elements that were present at Nisk and at Lion elsewhere in the belt, and we. You're always trying to sort of give yourself more shots at the title. So we felt that if we could, acquire land in a reasonable way, it would be accretive to the shareholders to do so. And we've been talking to our neighbors, and obviously we're able to make a fair deal, I think, with Lift. They're sharp operators. They're one of the better geological teams out there, I believe. And they're obviously looking for lithium. That's their primary concern. So this was not in their wheelhouse. Each especially in the polymetallic world, there's a lot of different elements to successful exploration. So I think for them it would have been a reach. I'm not saying you couldn't do it, but it would be risky and time consuming. So the better trade-off was to sell us the piece that had the most upside on the polymetallic side, and keep some of the other area that they have more prospectivity for lithium and possibly even gold. So I think that's what we were able to accomplish. As a good transaction that worked for them. And for us, obviously, it almost quadruples the land position, really, and gives us a lot of, I think, future upside and where we can grow after, as we continue to explore Lion and Nisk, and it gives us ability to turn this from a single mine into maybe a district scale opportunity, and that could be really beneficial to our shareholders.
Now, as far as drilling, Terry, we mentioned the $50 million raise. You're fully funded to drill 100,000 meters over the next several months. You're going to have 6 rigs running at some point eventually. So can you give us more of the detail on the plans for Nisk and Nisk East and the Lion and Tiger zones?
Yeah. So we just before we announced the lift package, we sort of did our last assays for the winter program. We were running 2 rigs. The last one was the last big highlight number was 12.5 meters of 11% copper equivalent. So we're still hitting the really high grade out there, which is great. So we're now got 2 rigs turning. We'll have 2 more by the end of the month, and then 2 more probably not until after the moose break, which will be October 15th. We've been scaling the core cutting facilities and whatnot to sort of process the core that will generate in an efficient and effective manner. So it's gonna, we've got a really amazing sort of outlook for the summer and through to Christmas, where we're going to be looking to drill and in between Nisk and Lion, and between and Nisk and Lion, and look to connect that 5.5 kilometer stretch, which we feel is connected. And with the approach we've been using up there has been highly impactful. We've been able to hit on 50% of our holes is an approach called borehole EM. So when we drill a hole, we basically send a electromagnetic tool down the borehole, and basically it flashes it out, and it basically is reactive to sulfide bodies. So if you have a copper sulfide or a nickel sulfide out there, it will flash, and it gives you it doesn't give you the X, Y, Z, but it gives you the X and the Y, and you can, with a couple of holes, generally intersect those plates, and that's really how we've been able to progress and grow the line so rapidly. So we're continuing to use that, and we'll be expanding that use over the summer into the fall, and we're expecting to get some exciting new discoveries to the already exciting discovery we've got.
You've got a new VP of exploration in Joe Campbell, and the type of drilling you were just discussing, is that part of this whole Western mining approach? And what is that exactly? Was that a company in the past that used a certain style of drilling, or can you explain that more?
Western Mining is one of the iconic mining companies in the history of mining. I mean, like Inco, really. They basically were Australia's premier mining company, and then eventually they got gobbled up by BHP, which had been an oil company to that point mostly. So they're part of the BHP complex now. So Joe had been trained there. So had Steve Beresford, who is our board member and pretty much our thought leader on the Polymetallic side. He had been chief geologist at First Quantum and then at MMG, and then chief scientific officer at IGO. So 3 multi-billion-dollar successful polymetallic companies. So when you're searching for polymetallics, one of the better tools to use is borehole EM. It's in some cases it can be done in an area where there's a lot of false positives, like if there's a lot of graphite or chrome available. So it becomes a bit more difficult to use there. But we've been blessed in that the current environment we're exploring in doesn't have the false positives. So we've been able to really sort of shoot fish in the barrel there and find these things. And so both Stephen and Joe had worked together at the same time at Western Mining and had the same sort of principles on exploration and how to move forward with it. So we're continuing. We really always have believed we had a top tier scientific team, and we're continuing to always look at the technologies that are available that are coming to the scene to make our people more effective. So we're pushing the edge scientifically and with a great set of team members that know what they're doing. And it's my job just to get these guys the money and really sort of help them in any way I can to be more effective and get out of their way, really, because I really the rocks is really what they do.
Terry, back to the zones. You've said that the Tiger Zone is the smallest right now, but it may have the potential to be as big as the Lion Zone. Can you give us some more detail there?
Yeah, there's a lot of area untested there. So we had the conference call, not the conference, but we did the Red Cloud yesterday, a longer form interview where we did the presentation, and so Joe went over that in some detail. Joe Campbell, about the Tiger Zone, and our over the summer we're going to be drilling up a lot of the what we call white area where there's no tests, and we'll see it. It took we did the Lion 16 holes was what basically uncovered it. 8 of the 16 hit. So we've had some good sniffs at Tiger where we've had very high grade 2 to 5 meter intervals, but we haven't had that 20, 30 meters of sweet stuff yet. But it's still quite possible it's there, and we just hope we'll find it this summer. So we'll give it a good thorough test and sort of see what the drill bit gives us. Certainly we on our borehole EM, it still looks like there's plates there that we haven't tested, so that's why we're still remain fairly bullish on Tiger. And then obviously we're putting in a whole series of holes, offensive holes from Lion west to Nisk east. That's about a 5.5 kilometer stretch. And we'll every 300 meters we'll push out. So effectively, by doing it that way and using the borehole EM, we'll effectively do a borehole EM across the whole length of that property. So that'll pretty much it'll give us the best odds of finding any of the massive sulfides that exist between there. And historically, in these types of discoveries, there's never just one line zone. There's always multiple zones, and underneath it is a bigger beast, which we haven't found yet either, which is the nickel sulfide father of this zone, or mother, whatever way you want to call it, the parent, because basically the Lion is a pipe that came from a much bigger nickel sulfide that was subsurface, that some hydrothermal action happened, brought it up to the surface, and then it was precipitated in between some faults that made this highly concentrated and made this freakishly high grade zone. And generally, while that's super rare, there's only like 20 of them in the history of the world, but when they do happen, these pipes are not individuals. There's usually several pipes. So we've at this point got the one pipe. Tiger potentially could be another. We think there'll be several. So we're on the hunt for it this summer, and we feel like there's going to be some more pipes found.
Terry, can you give us a bit of a cadence in terms of the drilling program through till Christmas, as you said, and maybe sort of the news release flow that we can expect in terms of the results?
Yeah, so basically, I would think, we're drilling now, so the assays take between, I would say, 7 to 12 weeks, depending upon the busyness of the labs. Also, how many samples we have to reassay, because they're typically with us, it's because it's been so high grade, we've had to reassay the grades so you can confirm them and use a totally different technique. So that tends to add to the length of time from the assay. It's a good news thing, obviously, because it's a higher grade result, but it does take more time. So I'm expecting. We've been sort of saying to people, look for after the August long weekend, we should be closing in and getting some assays back from the first of the summer program, and then it'll be pretty much continuous. Every 2 or 3 weeks from that point forward through Christmas. So that'll be good for a news flow perspective. There'll be some more, we think, business development stuff that we'll be talking about over the summer, and that'll be, I think, positive for us as well. So it's likely to be, we sort of had a quiet period there after the financing and after the Trump tariff shenanigans. We were fairly quiet for a bit. Didn't seem to be a lot to talk about. Everyone's attention was rightly focused elsewhere. But now we're sort of into a wheelhouse of news and action, and it'll be pretty newsy here from this point forward.
All right, that's great. And just lastly here with the stock, we talked well over a year ago now, I guess it was. The stock was trading around 20 cents a share. You famously said people have to get off their wallets. This stock's going to move, and it did. It went to nearly $2 a while ago. It's consolidated since then. I'm looking at it right now at $1.24 as we speak. So is that what investors are doing right now? They like the story. They're just waiting for more news flow, more confirmation that you're really sitting on something big here.
Yeah, I think it's natural for stocks to surge and then to consolidate and pause a bit, and then the good ones surge again. And we were the top performer in 2024 in the mining sector, and I've been on record saying I think we'll be the top performer in 2025, which is a bold claim, but I believe it's going to be backed by the drill bit. And again, we'll be a drill bit driven company. Our valuation should rise and fall with our success in the ground, as it should be at this stage. And I think we're going to have a lot of success. I think fundamentally why we were able to raise that amount of money in what is still a very difficult market is that we were able to show the smartest mining investors in the planet, Robert Friedland, Rob McEwen, all the great mining funds that invested, that we were fundamentally undervalued relative to our peers. Like maybe we're trading at 20 to 30 cents on the dollar back then, when they invested at effectively $1.45 a share, even though we got more like $2.50 in the cash side of things because of the tax structuring. But the point is they invested with ample disclosure and full knowledge of all the other opportunities in the world. They invested significant sums at $1.45, and the stock's trading underneath that. So I've been saying to people, wow, what a great opportunity. You get to buy cheaper than the giants did. Good on you. Take advantage of buy the dip, and I think we're gonna sort of get re-rated maybe when we move to more senior exchanges in the fall, and obviously on the basis of what we think will be more excellent drill results. So it's a great time to be looking at Polymetallic.
So have you filed to move up to the TSX yet, or?
No, we're actually looking at New York.
Okay.
So I think that would probably be the next move for us. Is we think if you look at the money in mining and investment back in the day, when we had more robust mining markets, it was about 5% of the capital was in mining. Today it's like 1%. So it's mining was an afterthought, and it's just insane when you think that in the world that we live in. I'm sitting in a condo building, sitting on a chair at a table. All this stuff, it was either grown or mined. Okay, and mining is just such ridiculous valuations right now. The equities to mining, equities to commodities split has never been greater in the history of man. So clearly there's going to be a move back, we think, to commodity investing, and that'll reflect well on the mining stocks. You're starting to see now governments, whether it be in Canada or President Trump, talking about critical minerals and mining that, hey, these guys never mentioned mining in their lives, until the last couple of years. So it's starting to come from the top down because people realize, hey, we're running out of these materials. Our supply chains are really disarray. And so we need to get our house in order. So this is coming now from the governments and think tanks. It'll eventually percolate down into the broader consumer discussions. Talking heads like Kramer will start to talk about mining stocks, which he's never done, but it will happen. And then remember, there's only such a small number of really what I would call quality mining stocks. So when the money comes in, and the money will come in and starting to come in now, but it will come in and these things have a tremendous network effect. It'll come in a hurry, and then they'll be, trying to sort of put all this capital through a very small hose into a select group of companies. So there will be some serious re-ratings. Companies will double and triple very quickly, and there'll be 10 baggers and 100 baggers in the space. Sounds like lunacy, but this will happen. And that's why people should be doing their homework now in the piece of the summer here, and great time to be looking to people like Red Cloud, and there's got a lot of great data out there to let people make educated decisions on a portfolio approach. And or what I've always said to people, look, if you can't get comfortable about investing in individual companies for whatever reason, there's a lot of great funds out there, like McKinsey and BT Global and Palace, and 1832. These are tried and proven fund managers that have had excellent track record over time. And that's not a bad way to go either. You won't miss it if you get in with those guys, and maybe that's a good way to go. So, but I believe there'll be more capital inflow, and that will drive the markets ultimately.
Well, Terry, you've been around long enough to have seen those kinds of moves before. You tell a great story, exciting stuff. Great to get an update from you, and we'll be following and talk to you soon.
All right. Great, Mark. Have a great day. Cheers.
Good stuff. Terry Lynch, CEO of Polymetallic Mines. Thanks very much for watching. We'll talk to you next time. Take care.
Cheers.